Welcome. So today we're going to talk about a massive, and I mean massive, shift happening in business finance. It's a change that is basically making the old accounting playbook totally obsolete. Let's get right into why your relationship with numbers has to change, like right now.
Look, this might sound a little harsh, but it is 100% the truth. For decades, finance was all about just tallying up the past. But today, that's like trying to drive a car forward while staring only at your rearview mirror. It just doesn't work.
So this is the big question, right? This is what every single business owner and finance pro needs to be asking themselves. If the machines can handle all the number crunching, where do we, the humans, actually provide the real indispensable value?
Okay, first up, the automation shift. Let's just be super clear about this. The era of someone manually punching in numbers, it's over. It's done.
I mean, really think about that for a second. Bank feeds, invoicing, putting expenses in the right bucket, it's all happening automatically now. This isn't some future prediction. This is what's happening on the ground today. So if we're not doing that anymore, what should we be doing with our time?
And that brings us to the second huge problem, the danger of relying on old data. It's what I like to call rearview mirror management.
You know that monthly profit and loss statement you get? It's not a competitive advantage anymore. It's just table stakes. It's the bare minimum. It can't tell you if you can afford that new hire tomorrow or if you should double down on that marketing campaign today.
And this really highlights the critical shift in roles that's happening. We're moving from being a bookkeeper to being a strategist. See, the old model was just about recording what happened. The new model, it's all about interpreting what it means and, more importantly, telling you what to do to either avoid a disaster or jump on a huge opportunity.
And this analogy just hits it perfectly. The software, that's the MRI machine. It's amazing, and it takes the picture. But your value, or the value of your finance team, is in being the specialist doctor who can look at that picture, diagnose the problem, and then prescribe the exact treatment to keep the business healthy.
So, if the good old P&L just isn't cutting it anymore, what should we be looking at? Well, this brings us to 3 key metrics that every single modern financial strategist needs to have mastered. Now here's the thing. A machine can spit these numbers out in a split second, but it has zero context. It doesn't know your market, your team, or your goals. It can give you a number, but it can't tell you the story behind that number, or what the next chapter of that story should be. That's the human element. That's strategy.
First up, true cash runway. And this one is so critical because of this simple fact. Profit is an opinion, but cash is a fact. You know, profit doesn't pay the bills. Cash does. This metric is your survival clock. It tells you, with brutal, honest clarity, how much time you've got to fix a problem before the lights go out.
So let's say the software shows you've got a 4-month runway. A strategist doesn't just forward that email. No way. They come to you with a plan. They say, okay, we need to cut these specific costs and renegotiate with these 2 suppliers, and that will get our runway to 6 months. So here's a quick test for you. Right now, off the top of your head, can you name the top 3 things you would do to double your cash runway? A strategist can.
Okay, next up, payback period on customer acquisition. Think of this as the pulse of your growth engine. It asks one simple but absolutely vital question. If you spend money to get a customer, how long does it take for that customer to make you that money back? The answer to this question, well, it's pretty much everything.
And the difference this number reveals is just stark. A 15-day payback period, you've got a money-printing machine. Pour more fuel on that fire. But a 9-month payback period, whoa, that's a leaky bucket. You could actually go bankrupt just by trying to grow. A strategist sees that number and immediately yells, "Stop! We have to fix the model before we spend another $1."
And our third metric, contribution margin. Now this is where it gets really interesting, because this is the metric that uncovers the hidden poisons in your business model. It answers one simple question. After you pay for all the direct costs of making or delivering your product, are you actually making money on each sale? Because if your costs are quietly creeping up, you could be losing a little bit on every single sale, even while your total revenue is going up. It's a silent killer.
Okay, so we get the metrics, but how do we actually build this forward-looking strategy into our regular routine? It's actually a lot simpler than you might think.
It really just breaks down into a simple 3-step routine. First, the weekly flash report. Just a quick snapshot of your cash position. No surprises. Second, scenario modeling. You got to stress test your data. Ask what if.
What if our biggest client leaves tomorrow? You need to know that answer. And third, elevate your talent. And this is the real game changer.
This is the huge mindset shift you have to make. You have to change the conversation. Stop asking, are my books up to date? And start asking, where is the biggest financial leak in our business right now, and what's the plan to plug it? If your finance team can't answer that second question, you don't have a strategic partner. You have a data entry clerk.
Ultimately, this all comes down to a fundamental choice about the role you want finance to play in your business.
You have to stop being a historian and start being an architect. A historian just documents what already happened. An architect creates the blueprint for what is going to be built. It's about designing the future.
And here's the best part of all of this. Automation isn't a threat. It's actually a gift. By taking care of all that tedious busy work, it frees up our most valuable resource, our human brain, to focus on the one thing that actually guarantees future growth: strategy.
So I'll just leave you with this one question to think about. Take a hard look at your own business. Is your financial team looking backward, telling you stories about the past? Or are they right there with you, building your future? The choice really is yours.